How's it going, everyone? It's Sam. We just saw Andy Jassy, the CEO of Amazon, talk to CNBC, and he gave a warning. He talked about tariffs. He talked about passing on costs to consumers, what they're focused on, the demand of their data centers. Let's talk about it. If you don't mind, hit subscribe so you can see future videos like this. Let me know if you want more videos like this down below in the comment section. Also, if you want to trade crypto, there are links underneath the video to BTCC, Blowfin, BitUniX, WEEX, CoinW, etc. So we just got an interview from one of the largest companies in the world, from the CEO of one of the largest companies in the world, and they have obviously so much data on the consumer, right? They have millions, if not tens of millions of orders a day going through the platform. They use AI, so they can tell what consumers are seeing, what they're doing based on this tariff situation. Now, the first question, CPI came in lower than expected. Is this something you pay attention to? And Andy said, no, that's not really something we pay attention to. Are tariffs something you pay attention to? He said, yep, we look at everything that affects the consumer. They said that they're really focused right now on trying to keep costs low, focusing on the customer experience, making sure that people are able to get the products that they want as cheaply as possible, as quickly as possible, and that the consumer isn't too affected by this. They did mention too that they're trying to buy some products ahead of the tariffs, right? They kind of front loaded some of their buying so that way they don't have to pass as much on to the consumer. They reiterated several times that they're going to try to keep prices as low as possible. And they also said that they're trying to renegotiate some contracts as well to try to make sure that, it's the best customer experience as possible, right? They're very focused on the consumer. Now, Andrew Sorkin from CNBC said, okay, well, are you seeing a pull forward in demand? Not just you guys buying, but are you seeing some people that are saying, hey, I need these products fast because I don't want to have to pay the, now I think it's 150% or 154% tariffs from China. Are you seeing, are you seeing people buy now instead of waiting? And he said, we're seeing a little bit of that, but it's not something that we can really bank on. We're just looking at the last few days. And yeah, we don't know if it's going to be continuous or if that's just kind of a one-time gut reaction to the tariff news. Now, obviously, yesterday we did see a bit of tariff information getting cleared up. We're having 10% tariffs on nearly everything, 25% on aluminum and steel, I believe, from Canada and Mexico, and then 154% now, I think, on China. So they are, again, focusing on the consumer, trying to keep the prices low. But Andrew said, Andy, well, who is going to actually pay the extra cost, right? It has to be pushed on someone. And Andy Jassy, the CEO, said, well, honestly, most people they're selling on Amazon don't have that kind of margin to work with. They're not going to be able to eat the 154% tariffs. It'll depend a little bit on the product, obviously. It'll depend a lot on the product, but most people will probably have to eat the cost, or the sellers will have to try to pass on that cost, I should say. So things are going to get more expensive. Now, at the end, though, they did talk about whether they're scaling back their own investments, right? Like they're putting in, I forgot if it's Google or Amazon that's doing 85 billion. I believe it's Amazon doing $85 billion worth of investment into their business in Capex this year. And they were asked, are you going to scale this back with uncertainty? He said, no, we've really focused on diversifying our supply chains, on diversifying where we can get these products from that we need, or this Capex investment. So they're still going to go through with it. They still feel like there's so much demand. He said there's so much demand for cloud and AWS. There's so much demand from AI as well. We are not scaling back. We have more than we can handle right now, which I think is that's a really good thing to hear, right? One of the biggest companies in the world that's going to reinvest so much money in just that $85 billion alone. How many jobs does that create? Right? How many jobs does that create? That's insane. So they're not scaling back. They're focusing on what they can control. They said that they really don't have a good feeling for what's going to happen in the future. They don't know much more about tariffs than anyone else. So there is some uncertainty. Today, the stock market's down pretty significantly as well. We're down 4.5% or so on the NASDAQ. I think Amazon's down like maybe 5.5% because it was up 12% yesterday. So yes, there's still a lot of uncertainty. We still don't know who's going to eat all these costs. And I think that's one of the reasons that we're not seeing so much excitement from the CPI, even though it was lower than expected. And some people are calling for rate cuts because we're at 2.4%. It was 0.2% lower than expected on core and on headline CPI. The hawks, though, will say, well, we've got to keep interest rates higher because we don't know how these tariffs are going to affect inflation, right? Yeah, it's great that we're down 0.2%, but if we get a significant amount of our products from China and then we're slapping on 154% tariff, this will increase prices. This will cause inflation. So we can't just look at the last month. We have to look at what's going to happen moving forward, right? Is this going to send us back into an inflationary time? So that's why I think it's so interesting. That's why you don't want to be out of this market, because we can see how quickly the markets can spike up. The stock market, crypto market can spike up based on what happens with the tariffs. So the tariffs, let's say there's some deal negotiated with China, that reduces the issue of inflation significantly. That increases the likelihood of a Fed rate cut significantly. That means that the risk-free rate of return goes down. That means that people are less worried about the stock market in general, retaliatory tariffs, about profits going down on these massive companies. There's a reason why the market jumps so much when the tariff concerns are lowered. So I think now is a great time to be dollar cost averaging into the market, but you don't really know what's going to happen here over the next 2 days, 2 weeks, 2 months. But over the next 2 years or 20 years, you're probably getting in at pretty good prices. Right? Like just yesterday, again, we had 10 to 15% moves on some of the biggest companies in the world. So that's what we did before tariffs were even out of the picture completely. What's going to happen when we have some of these concerns go away? Yeah, obviously we could still keep some tariffs on, but I think the market will be excited if it's just, a 10 or 20% tariff compared to the escalation that we've seen recently. So don't be surprised if there's a lot of volatility over the coming couple weeks. We have earnings coming up here very soon, so we're going to see guidance from a lot of different companies, what they're seeing over this time period between now and then as well. So yeah, it's going to be really interesting. We do have some big banks announcing earnings tomorrow, so be on the lookout for that. We also have PPI coming tomorrow, so another inflation gauge. Be careful out there. Do your due diligence. Thank you so much. I appreciate it. Hit subscribe, and I'll see you in the next one. Bye.